Welcome to the Real Estate Show, brought to you by Capital One Group, LLC. Eric Willner, president of Capital One Group, LLC, is a highly trained financial professional. He helps clients to develop strategies for effectively utilizing real estate, mortgages, and related financial products to achieve a more secure financial future. For the real estate investor or the home buyer, he's able to provide expertise in matching the right properties and financing with your specific financial objectives. This show is dedicated to helping you find the safe and simple approach to buying income-producing real estate. If you have any questions about the program or to arrange a consultation, call toll-free 888-595-7779. That's 888-595-7779. Now, today's edition of The Real Estate Show.
And hello, South Florida. Hello and welcome to another live edition of The Real Estate Show, South Florida's #1 program and America's longest running daily show all about real estate. We want to welcome all of our listeners here locally in the AM 740 listening area, as well as those locally in the 96.9 FM listening area. Not to mention all of our worldwide listeners, no matter where you are, as long as there's internet available to you. You have access to us via our website at www.automaticlandlord.com. That's www.automaticlandlord.com. You can listen to us live as we stream this program 5 days a week, each and every morning at 8 a.m. Eastern Time, all the way until 8:30 a.m. Eastern Time. So that's 5 days a week live. And then, of course, you can also catch our rebroadcast, the recordings of the show, both audio and as well as video. We have those up on our Facebook page. So check us out also on our Facebook page at The Real Estate Show. And that's at facebook.com/The Real Estate Show. And you can listen to some of our recent rebroadcasts. And if in case you didn't catch yesterday's program where we talked about step number 1 of our 5-step process for buying real estate, we talked about locating properties. And just a quick recap, we talked about looking for, sort of the diamond in the rough. The MLS is a great location to find properties for retail purchasing. But when it comes to getting good deals, getting deep discounts, the MLS, after all, only represents about 2.5% to 3% of all of the properties out there. So when in today's market, by our calculations, as many as 15 to 18% of the properties, because they're either delinquent, they have list pendencies filed against them, they're either in default, or they may be upside down. That represents almost 20% of the market, and only about 2.5% of those properties are actually on the MLS. So that begs the question, of course, and we talk about how do you find those, and you have to sort of go to the root source of why properties end up going up for sale. And that could be because of a foreclosure sale, the most obvious. It could be because of a divorce. It could be because of a job transfer. Oftentimes, landlords that get burned out because of bad tenants or properties that are at the end of their useful life, or at least the mechanics of the property might be at the end of their useful life, and they don't want to spend any more money investing in the property. So they get burned out, and then if that happens, then a lot of different things. They end up getting lower rents. They end up getting worse tenants, and then they too could possibly fall behind in their payments. Job loss is another reason. Property taxes becoming delinquent is another reason why properties go for sale. Sometimes it's health reasons. It's not the property. It might be the owners have their own issues, health, death. Other times it could be job transfers or relocations of the owner. And so then all of a sudden managing a property long distance, if they haven't called Capital One Group in order to talk about how to have their properties managed efficiently and on automatic pilot, then they have other options that they can explore and do themselves. But many of them don't know how to manage properties well from a distance. Then there's, of course, the issue of out-of-state heirs inheriting properties. You have the issue of the military transfers and moving around. And of course, after all, there are people that tried to sell their properties, were unsuccessful doing so with a realtor, and now the property maybe end up vacant, not cared for, and then definitely a don't want situation. So those are some ways to find great properties. We talked about that yesterday. How do you spot them? Well, you can find out just simply by looking for tall grass, newspapers accumulating in the yard, no curtains in the windows, piles of junk or leftover belongings, trash that hasn't been taken out in a long time, stickers on the front door. That's always my favorite description. And I always tell people to call me, snap me a photo or call me with a photo of a house that has a yellow sticker, a white sticker, a pink sticker, or form on the door. Those are famous ones for evictions and sheriff sales. No no visible signs of life on the property. And another one, which is sort of a giveaway telltale, is when you look at the side of the house and the meter's been removed. That means that there's no one been there for quite some time. So these are the things to look for. And in fact, the other thing I wanted to just remind our listeners, because I had another instance. I had, in fact, a brand new coaching client who came into us, and he is one of my favorite people, an Uber driver. And I try to tell people to look at what they're doing today in their lives that may be already an asset to a real estate investment career. Someone who drives around and is on the road a lot, now you got to start paying attention. I always talk about how when you buy a red car, all of a sudden you realize and notice all the other red cars on the road. Well, when you are a real estate investor and you start putting up that antenna and you start paying attention to those telltale signs that I just told you, all of a sudden you start spotting them literally in every neighborhood. And the same thing happens. So, I hear the excuse sometimes that, yes, Eric, all those ideas and theories and strategies and techniques are good where you live, but where I live, it's different. And it's not different. I can tell you that from going from the West Coast in the hottest parts of California to the hottest parts of the Northeast, right outside of New York. Now, of course, in the metropolitan area, there might be more challenges, and there are certain areas that are just so hot that you put a property on the market, no matter how bad or distressed it is, there's a buyer waiting in the wings. But step outside just a little bit, just a few miles outside the center of these metropolitan areas, and the opportunities abound. And I just had that experience a few days ago up in the Newark area. So that was what we talked about yesterday. Step one, of course, is to locate the property. Step two is, now what are the key factors in determining whether I have a deal or not? And what we're talking about now is evaluating the property to figure out, number one, what is the value of the property? Number two, if there's repairs, how much will that cost? And how much should I factor in to the price of the property? And then, given all of that information, once I know how to evaluate the deal, once I know how much repairs need to be done, then I have to go back and say, okay, well, based on that, how much can I afford to pay for a property that will allow me still to make a profit? And here's a little twist on your thinking, because a lot of people think that the lower that I pay for the property, the better the profit margin will be. And I'm going to say to that, maybe, because maybe if you offer too little for the property, you're just going to be making offers unsuccessfully and not being able to reap the benefits of actually finding a property, making a markup, and then selling the property. Right now, I'm talking about short sale ownership of the property so that we can make a short-term cash gain. And I want to remind our listeners, by the way, that for what I'm talking about, you actually don't have to have good credit. You don't have to have verifiable income. In fact, you may not even have to have money to put down, because I can show you a little bit of a technique and a strategy where you can do all that and basically serve as a finder for properties and make part of that profit. And if you have any more questions about that, I invite you to give us a call. And I'm going to give you the phone number in just a second. But so number one, the first thing I want to say is that when we find those properties, we're always looking for properties that have signs either of distress or have signs of a don't want owner. But I do want to avoid, and those, by the way, those properties are in every neighborhood out there, from the bottom of the list to the top of the list. There are properties that for one reason or another, and we just went through a whole list of them, they are properties that have a motivated seller. And probably if I were to isolate one thing that's the most important across the board, is to be dealing with people who need or really, really want to sell. And that's, of course, commonly known as a motivated seller. And those can be in every neighborhood. They can be in good neighborhoods, medium neighborhoods, and bad neighborhoods. But I'm going to tell you to avoid the worst of the worst neighborhoods. If you have to walk in and collect rent armed and aided by security guards, or you don't feel comfortable in that area, then I suggest you don't go there. And we call them war zones, the places where even when we go to do rehabs, it's like taking 2 steps forward and 1 step back. You make an improvement to the property, and then when you come back in the morning, the materials that aren't attached. In fact, I've even seen worse cases where they even come in and steal the material that was attached. And so what you don't want to do is be in that kind of a position. So I stay out of the war zones, but I certainly do like blue collar, working class neighborhoods are actually one of my favorites. But I would stay sort of in the middle of the marketplace in terms of price and quality. The houses that we talk about, a lot of them we like are vacant, and they're often not in the best condition, which of course adds to that element of don't want by the owner, and in many cases is sort of past the point of no return, and that makes it even more attractive to us as investors, because then we have a very motivated don't want the property type of sellers. So I'm going to take a quick break, hear a few words from our sponsors. When we come back, I'm going to get into the nitty-gritty part of the evaluation process. And so don't touch that dial. Come back with pencil and paper. These are going to be real valuable tips for you. This is Eric Willner. You're listening to The Real Estate Show, South Florida's #1 program all about real estate. I'll be right back. Hello, listeners. This is Eric Willner, your host of The Real Estate Show. Exciting news. We now have a Facebook page. Now, this is an opportunity for us to share with you photos and videos and interviews and lots more information on a regular basis on our Facebook page. But to make it really exciting, we want your input. We want your comments, and most of all, we want your likes. And that will make us a much better radio show, and our Facebook page will be a real resource for you. So check us out at facebook.com/The Real Estate Show. That's facebook.com/The Real Estate Show. And give us a thumbs up.
I said, damn, there's traffic jam. Well, there you are, sitting in traffic like thousands of other motorists listening to Eric Willner's Real Estate Show. Here's a thought. If you're listening, so are potential customers and clients. Radio advertising works. So become an advertiser or sponsor guest on Eric's show. Get your message heard. Call 1-888-595-7779. That's 1-888-595-7779. Your customers and clients are waiting to hear from you. Said, damn, there's traffic jam. Call 1-888-595-7779.
Today's real estate market is full of questions. Eric Willner and Capital One Group LLC have the answers. Call today for a no-obligation consultation and get the facts. 888-595-7779. That's 888-595-7779. You'll learn the safe and simple approach to buying income-producing real estate. And you'll find out how to get the right real estate investments for your specific investment objectives. Plus, you'll have immediate access to cutting-edge mortgage and financing products. Be sure to ask about free property management on select investment properties. Call today for your no-obligation consultation and get the facts. 888-595-7779. Toll free, 888-595-7779.
Are you paying for a home that is losing value every month? Do you owe $400,000 and your home is worth only $300,000 and still dropping? Do you want to know more about what the government is doing to help you? You have options. Don't just give up or walk away. Know your rights. Fight back. Fistel Law Firm can help you. Call for a free consultation today. 954-522-1212. 954-522-1212. Or on the web, fistel.com.
This is The Real Estate Show, brought to you by Capital One Group LLC in Boca Raton with your host, Eric Willner. If you have any questions about the broadcast, call toll-free, 888-595-7779. That's 888-595-7779. Now, back to today's show.
And welcome back. For those of you who might just be joining us, you are listening to The Real Estate Show, South Florida's #1 program, South Florida's longest-running program, and America's longest-running daily radio show about real estate, now in its 17th consecutive year. Through the good times, through the bad times, we're here sort of as a beacon in the market, showing people the right way, the safe and simple approach to buying real estate, whether you're buying it short-term, medium-term, or long-term. We have the solution on, I think, evidenced by our longevity and consistency. I think we have the formula down pretty well. And that's how we teach a lot of this, is in terms of processes that we have, that we figured it out. You know, why reinvent the wheel if it works? I think we have the right priorities. We talk about cash flow. We talk about how to evaluate properties, which is what we're talking about today. I decided to sort of summarize in 1 week and in 5 programs the 5-step process in order to buy and sell real estate at a profit. And yesterday we started out with process number 1, or step number 1, which is to locate properties. And we started out about talking about the different reasons why people become must-sell or motivated sellers and how to find them. Then today we've been talking about how to evaluate those properties and to figure out how we can make a profit doing that with consistency and predictability. And so, you know, the first thing that you have to do, and I recommend that you always start with the end in mind. Know who your target audience or your target market, who is your ideal client. And based on that kind of client, then what you want to do is you want to look for the kind of properties that your ideal client will want. Now, first-time home buyers tend to be a very desirable target market for a number of reasons. Number one is, they are in the market for the first time. So they're very anxious buyers. They tend to have, they tend to shop in the market price range where there is the greatest amount of inventory. So if you were to look in terms of a bellwether curve, it'd be the widest part of the bell. They are excited, very excited to make their first purchase. They have a lot of dreams and a vision of what they want. So they make a lot of emotional buying decisions, which you can help them with by making, nice quality improvements. Granite countertops have become sort of a real desire for many people. The stainless steel appliances, and both of those have really come down in price. So it makes it affordable for the real estate investor who knows how to buy those correctly, to put those in these modest homes, and it makes them very attractive. They sell very fast and for top dollar. These home buyers are generally, very anxious to get into, so they're less risk of walking away. They're not as temperamental and they're not as picky about things. For first-time home buyers, there are even special financing programs, sometimes even special grant programs for down payment. So they tend to be able to pay top dollar for those entry-level homes, and so they tend to be a very good target market. So now let's talk a little bit about how do we, decide what the value is of the property that we're going to buy. And one way that you often hear real estate professionals talking about is what's called a CMA, or a comparative market analysis. And it's sort of the realtor's version of an appraisal, where they will look at comparable sales, compare like properties, like square footage, like ages, like amenities, and then come up with what's likely to be the market value, what somebody ready, willing, and able would pay for the property. Now, where do you get the comps from? Because after all, whether it be a certified appraiser or whether it be a CMA done by a realtor, or sort of the in-between that you've probably heard the expression of a BPO, which is a broker's price opinion, is sort of something halfway in between the two. They all depend on comps. And where do the comps come from? Comps come a lot from the MLS, because the MLS, in addition to being a vehicle to market properties, is also a way of tracking all the sales. So they keep track of all the sales. Usually they have a lot of information because they have a lot of marketing information, and therefore they, in order to embellish and make a richer, fuller description of the property, they have a lot of details. Also, title companies. Title companies can give you a property profile. So if you have a good relationship with a title company, they can give you information about the date of the last transfer, who the buyer and the seller was, who the current owner is. They can give you the price. They can give you the county's assessed value, not to be confused with the appraisal. A whole different topic and whole different conversation on what the assessed value is. But it gives you a ballpark number, and it also lets you know the expenses such as the taxes. There are other online free websites. Probably the most famous one is Zillow, but you've got your Trulia, which is related. You've got your Redfins, your Keller Williams, and all the different real estate brokerages. They also have their own online sites, most of them free, most of them trying to capture your information so that you can solicit their help in helping you to find the properties. But as a real estate investor, like I said, a lot of this comes, you can glean the information from these sites to get the market value. You can also go to the tax assessor's website to find out things about the owner, find out things about the square footage, find out about the taxes, so that you also get more information to make more complete analysis. And then there are those paid services, which tend to be a little bit more accurate, provide also very comprehensive information. And some of those are, Site X, which is sponsored by one of the major national title companies. You've got the Realty Tracks out there, RealQuest, and that's just to name a few. So now we have the data and the information. And there's three things that you want to really look at in terms of the comps. And that is proximity, how close, because properties that are close to each other are valued the same. You start getting out beyond half a mile away, in some cases, you can cross the street, one main thoroughfare. You can have great properties on one side and not so great properties on the other. So proximity, usually less than a mile, best, the closer, a quarter mile to a half a mile is the better. Better if it's in the same subdivision, and you can do that by looking on the tax records at the name of the subdivision there. Best of everything is if it's on the exact same street. And probably the toughest ones are where homes are more spread apart. They're not part of subdivisions. They're more rural areas. And that's where you get a bigger challenge. And that's where it's nice having a very experienced person in real estate or an appraiser that you can sometimes tap for those more difficult properties. The other thing that's important to realize is how long ago did it sell? A recent sale, very good. An old sale, not so indicative. Markets change. They change direction, up, down, sideways, etc. So generally speaking, within the last 90 days is really what we're looking for ideally, up to 6 months maybe. After that, then it's really, becomes more of a guess. And then the third thing is size and amenities, which of course, from square footage to the number of bedrooms to the construction, same style of the homes, the same age of the homes, the same lot size, and those are some of the key factors to look at. And then finally, as I said before, is that now you have to see, you have a good idea of what the value of the property is. Now you have to estimate or ballpark, and we have some really great shortcuts that we love to share with some of our clients on how to estimate the value, even if you're not an estimator, never been in construction, but you have an eye for the condition of the property. We've got some great shortcuts to share with you. All you have to do is give us a call and talk to us. We'd love to help coach you through the process, help you to find your first home, your first investment home, and help you out with those things. But once you find out what the value of the property, once you find out what the estimate of the repairs are, then we can create a formula, and there's a way of looking at recent sales. And there's usually one or two levels of sales. You can tell who the professionals are who are buying properties at a general level, at one level, and then you can see who the retail buyers are who pay top dollar, and you can see that there's sort of another stratus there as well. So, and then based on that difference, you can figure out where the profit is. I said that there's one real twist that you have to have as a real investor, is that the investor that wins the deals is the one that can pay the most for the property and yet still have his profit built into it. And that's sort of a different twist. People are always trying to pay the lowest, and they tend to fail at getting the deals, and they tend to fail at being the winning bidder on a property. I'm going to tell you that if you can figure out those two levels and then know how to pay the most, you'll have the most successful, the most consistency in finding out those properties, winning the bid, and therefore being able to buy the property and then resell it at a profit. Well, that's all I have time for today. That was step 2 of the real estate process. Stay tuned tomorrow for step 3. We'll announce what that is in the morning. We hope that you'll check us out both on our website and most importantly on our Facebook page. Come there, give us a thumbs up, like us, check out our previous recordings. And for then, I'm out of time. Until tomorrow, this is Eric Willner signing off. Drive safe and make it a great day.
Thanks for listening to The Real Estate Show, brought to you by Capital One Group LLC in Boca Raton. Eric Willner and Capital One Group LLC are available to assist you with your financial needs. If you have any questions about today's program or to arrange a consultation, call toll-free at 888-595-7779. That's 888-595-7779. And join us every day at the same time right here on AM 740 WSBR, South Florida's Money Talk Radio. The opinions expressed on this sponsored program are strictly those of its host, guests, and callers and are not necessarily those of this station, its staff, management, or sponsors.